Welcome back to DailyCrest News, your trusted source for the latest updates on global economics and financial markets. I'm your host, Mercy, and in today's video, we'll be diving into a pressing concern for China's stock market deflation. China's lapse into deflation is emerging as the latest risk for its struggling stock market, denting investor optimism over a much-anticipated earnings rebound. That's right, folks. China's stock market is facing a new challenge, deflation. This news comes at a critical time when investors were hoping for a boost in earnings to turn things around. Let's break down the key points of this issue and provide some commentary along the way. The CSI 300 index just capped its worst week since March after a drop in consumer and producer prices, added to signs of deterioration in the economy. We can see from the chart that the CSI 300 index has taken a hit, and the drop in consumer and producer prices is causing concerns. Deflation can have a domino effect on the economy, impacting consumer spending and business profits. Lack of inflation means lack of pricing power, said Mohammed Zaidi, investment director at Nikko Asset Management. Investors should recalibrate their earnings expectations for slower growth. Zaidi's quote emphasizes a key point. Without inflation, businesses can struggle to maintain their pricing power, which ultimately affects their bottom line. Investors should be prepared for a potential slowdown in growth. China's economy has shown increasing strains in recent weeks, with a sharp deterioration in July, imports underscoring how domestic demand remains sluggish despite Beijing's efforts to restore confidence. Despite Beijing's efforts to restore confidence, China's economy is showing signs of strain. Sluggish domestic demand and a decrease in imports highlight the challenges the nation is facing. Foreign investors, who snapped up onshore Chinese stocks for 2 weeks amid the optimism spurred by the Politburo meeting, sold each day this week, withdrawing a net 25.5 billion yuan, $3.5 billion, in all. That was the most for any week since October. Foreign investors seem to be losing confidence as they sell off Chinese stocks. This could be due to concerns about the impact of deflation on the stock market and the broader economy. Looking at the broader economic picture, recent data also showed that consumer prices rose by 3.3% in July compared to the previous year, slightly higher than the 3% increase in June. However, core consumer inflation, which excludes food and energy, rose only by 0.2% from June, matching the smallest month-to-month increase in nearly 2 years. To gain some expert insight into these developments, we reached out to Rubila Faruqi, chief U.S. economist at High Frequency Economics. Faruqi noted that the report showed producer prices running above expectations, but she added that the year-on-year changes still show headline producer prices below and core heading towards 2%. Faruqi and many other economists and market analysts believe that the Fed's most recent rate hike in July might be its last for now. As we await the Fed's decision during their upcoming meeting in September, several economic reports will be reviewed, including consumer price data, the Fed's favored inflation gauge, and the August jobs report. In conclusion, the data points to a moderation in inflation over the past year, bringing it closer to the Federal Reserve's 2% target level. The combination of more moderate price increases and a resilient job market has raised hopes of achieving a soft landing for the economy, finding that delicate balance between curbing inflation and avoiding a recession. That's it for today's update on wholesale inflation in the U.S. If you found this analysis helpful, don't forget to give this video a thumbs up and subscribe to DailyCrest for more informative updates. I'm Mercy, and I'll see you in the next video. Thank you for tuning into DailyCrest, your go-to source for insightful news coverage. Stay informed and stay curious.